Yeah. All right. So yeah, so you have price push down here at this point. Same thing we mentioned. We got to pull back up into the gap, dropped again. All right. Creating more imbalance, pull back up into the gap, dropped again. All right. Then here that we had prices basically trading here, like equal. All right. You had, buys and sells and so forth. All right. But here is where we got that next push. Market trade back up into the gap, dropped again. All right. Drop here again, into the gap, drop again. All right. And we have on the flip side, okay, on the flip side, where we have buys, price pushed up right here, that's the gap. Okay. That space here in the market where there was just the buys, right? Pushed up, traded back down into it, push up. Okay. And you guys see how these things pan out over and over again. Okay, big push up. So you're looking for the big push, the big momentum. Yeah, the momentum in one direction. Okay, not just random areas. Okay, so look for the momentum. You get the momentum, get the pullback into the imbalance, then you go. All right. So here we go. All right, the momentum, pullback, then you go. Okay. The momentum here, boom, you pull back, then you go. Momentum, you pull back, then we go. All right. So you guys following? Everybody it making sense? So then here, we got the momentum, all right? So the impulse, we got the correction now, bam, all right, into that area. Okay. Then we're looking for the movement down. Fine. Yeah. So that's what we're looking for over and over again. Price come, it created a low. So if this was a low here in the market, all right, you want to be sure. Obviously, everything, and this is where I want to reemphasize, everything has to work in conjunction with structure, right? Not just, okay, you see impulse, I see imbalance, let me take this trade, make sure it coincides with structure, right? Because here we got the same thing, we got imbalance, right? Right, balance. All right. Let's see. There's back into the area. Get a rejection, right? So we get a little rejection here, first push down. But in this area down here, this probably could have been a demand zone we traded into, for price to change direction. Yeah. So that's where great example. What y'all to see. Of course, you don't want to just like, okay, yeah, I see price push down. I get the momentum on one side, wait for the pullback, then enter for the sell. Now it has to work in conjunction, with overall structure. Am I making sense? Right? Am I making sense? Am I making sense? Let me know. All right, let me know. Let me know. Okay, good stuff. All right. So then here we have price push up. All right. We got price pushed up, left behind imbalance here. Boom. Market traded back, bang into it, and then pushed up once again. Okay. So that is how the fair value gaps work, right? Also known as imbalance. Okay. So if you're just joining in on this recording, right? We were talking about the fair value gaps, right? Also known as FVG. Right? This is also in your academy, right? Also in the university, also known as imbalance. Okay. And the sentiments of the market absolutely sorry. All right. Yeah, everything has to, make sense. Okay. Everything has to make sense. So that was that. All right. Now that was that. Now, like I mentioned, all right, like I mentioned, remember, we are all like just use everything together. You take everything together, your life is, listen, trading is going to become so much simpler for you. Okay. So we have price. So just remember these things. Yeah. You got price, give you an impulse. All right. It's your first indication. Cool. We left imbalance behind. Great. What are we looking for next? We are looking for we are looking for Oh gosh, what did I do? All right. We are looking for the pullback, or also known as the correction. Okay. So you got the impulse. Next step is identify the gap, identify the imbalance. Is there imbalance? All right. I mean, it strengthens the trade if you have imbalance, right? You know the market is attracted to it. So now we are waiting for the pullback. So we're not entering any trade prematurely. We are waiting for the pullback. Once the pullback happens, then we start to set up for our entries in the market. All right. No, write this down. You got three different types of pullbacks. Three types of pullbacks. All right, three types of pullbacks. One that is there's two that are more um uh they're more solid to trade from. All right. So the three types, number one, there's the aggressive pullback. All right, we don't really want to be trading those, but there's the aggressive pullback. Two, there is the corrective pullback. And then three, anybody can tell me what's the third one? Anybody knows? What's the third pullback, third type of pullback? Okay, nobody knows. Can't remember right now. Okay, there's the sweeping pullback. All right, there's a sweeping pullback. So there's the aggressive pullback, the corrective pullback, and the sweeping pullback. Okay, so let's break it down. All right, let's break it down. Most of what I would have shown you so far are corrective pullbacks. Yeah. Most of these are corrective pullbacks. Yeah. This is an aggressive pullback right here, for sure. Okay, this is aggressive. Yeah, we just got like a big sell candle down. Bam. All right, that's aggressive pullback. Yeah. These will be like corrective and sweeping pullbacks. So let me break them down. Let me explain. Make sure that everybody is clear on them. Okay, on the different types of pullbacks. Okay, let me just create some space. I think we can move this now. All right. All right, let's talk about the different types of pullbacks. All right, so different types of pullbacks. So we have aggressive pullbacks. So anytime, we're going to market, we can see, let me give you examples of them. All right. So an aggressive pullback, what that looks like is you have an impulse up, right? And then you have a move just like this, bam, right? Back down, right? So you have an impulse up and it looks like an impulse back down as well. That is an aggressive pullback. Okay. That is an aggressive pullback. Okay. It's not to say that it won't play out, right? But the likelihood of it happening is not that regular, right? It's not a strong, I would say like out of 10, you probably get like a six, right? Maybe a six, on those types of pullbacks. Okay. So, it's like looking at something like this, that's aggressive pullback. Okay. So aggressive pullback, where the market just drops right back down, fine. All right. Now, a corrective pullback looks like this, where the market pushes up, and then you see it coming down like, we coming down, we creating our lower lows and our lower highs. It's giving us a nice, taking its time, trading back down in the area into our imbalance and so forth. This is a corrective pullback, right? The difference is smoother and slower. You got time. to set up your trade, right? You got time, you don't gotta be rushing, right? You got time. That's a corrective pullback. Then you have your sweeping pullback. What do you, I mean, let me tell you, actually, let me show you guys first, and I want you to tell me why you think it's called a sweeping pullback. All right. So this is your sweeping pullback. All right. So you got price like trading down, kind of like corrective. All right. Let me get something looking like this, and then this. All right. Boom. All right. And then we get our push up. What do you guys think is called a sweeping pullback? Sweep liquidity, stuff on it. All right. Stuff on it. All right. It's more like lead to see. All right. All right. Perfect. Perfect. All right. So corrective is like just a nice, takes its time, comes back down and so forth. All right. This is like I would say like this is like a 9 out of 10 type of setup. All right. And then this one here is like a 9.5 out of 10 setup. Nothing is 10 out of 10. All right. Nothing is 10 out of 10. Yeah, but this is like a 9.5 type of setup. Basically it's sweeping, because one, you will see like price come and we create like those double bottoms and so forth in the market, right? Where the market is definitely attracted to, right? To grab that liquidity, right? That's where we get like liquidity grabs and so forth, right? We get the market trade down, grab the liquidity, and then boom, we get that push off, of that area, right? Because always remember this, like imbalance, you know, the way the market trades back to areas of imbalance is simply because that's where liquidity is also left in the market. Yeah, that's where money is at in the market as well. All right. So the market needs that money to move to get those, to get those aggressive push and so forth in the market. When we get that money, that's where we get that momentum and so on. All right. So the same thing basically occurs. That's why one, price is trading back into these areas. One, because it's going for the liquidity. All right. Two, whereas we get like, this liquidity build up, it's like more build up of liquidity is here, whereas we might have individuals know that because of how they see the market, the retailers, when price does like this, comes and creates a double bottom, the automatic reaction for persons is to buy. So what that means is that they have stop losses in place like right around this area. So what's going to happen is that our market is going to boom, push back down, grab the stop loss, create into the actual area that you're looking for, and then push up, and then the individuals that trade the type of like break and retest type of strategies and so forth too, right? If they don't have a full picture of the market, then that's what can happen as well because they got like sell stops and so forth in this area. So the market trades down, activate those trades, their stop losses are above, boom, hits their stop loss as well. Again, all that's ways that the market, that the market is manipulated, to create like these significant movements and so on. All right. So those are the different types of pullbacks. All right. Remember the market is trading back down for those gaps. Okay. The market is trading back down for those gaps. Okay. Now, lastly, I'm not gonna keep you guys here long. Also, for the last about 8 minutes, all right. What validates or strengthens an area, right? There's two things. There's two main things that's going to validate or strengthen your area of entry, right? Number one, a break of structure. Okay. So for example, in a scenario like this, where we have price push up, right? Breaking structure at this point, right? We have price breaking structure here. Yeah. This movement right here, all right? This created a break of structure. Great. that is one of your first indications that, okay, if I'm going to know, like take this, take another buy setup, right? I know that this area is one a pretty strong area, right? Because it created a break of structure, right? Number two, the second thing is that imbalance, okay? That I would share with you guys. That imbalance, okay? So we have one, a break of structure, and two, an area of imbalance, then great, right? That has strengthened the area, confirm, what is that we are looking for, right? Confirm what is that we're looking for, so that when we put in, for example, entries within this particular area, right, we know that, yeah, this is one of those 10, 10 type of setups, right? This is one of those high probability setups, rather than, not. Okay. So when, for example, we have things like this, where price does not break structure, right? It's not to say that it can't go ahead afterwards and break structure, right? But the probability of it happening is not as high as a move like this. Yeah. We want to see price breaking structure. We want to see price grabbing this liquidity above, and trading back down into the liquidity and the imbalance and so forth below, right? We want to see that happen because, of course, if we are looking for buys, remember, we know it's an uptrend if the market is creating higher highs and higher lows. Okay? If we don't create a higher high, then like we don't know for sure it's an uptrend. We need to see breaks of structure at every given point. We need to see price come up here, like boom. We want to see that, all right? That is going to make us more like confident in that trade. We need to see price break above the previous high. All right. I see Kurt has finished his session. He's in this session. That means we're going too long. You recorded your session, Kurt?
Yes, I did.
Okay, it was just me then. I'm so sorry. I know maybe the beginners gonna want that session though. But hey, so yeah, so that's basically, the things that will confirm that will confirm your setup or strengthen rather your setup. If you got a break of structure, and also if you got that, imbalance left behind, those things, solidify your entries in the market. All right. So let me know if anybody has any questions, like if that made sense. We had a nice GJ trade here today. Let me know if that made sense, guys. Just keeping it by in the meantime. Where did it go? Let me know if that made sense. Okay, delete it. Let me see. Let me see. Okay, for sure. Okay, anybody got any questions about anything? Any questions about anything? All right, cool. So we are solid then. We are solid. What's the best time frame? I love that question, right? Because it works on any time frame. All right, let me show you what I mean. All right, it works on any time frame. Um, it's just, like it's just again, just work with your like it has to work with structure. That's what I would say. Like you gotta see some breaks of structure. What it was, yeah, because I use it on every time frame. When it's entries, when you get down to entries in the market. So when we get into entries in the market, then you're gonna see now, okay, well, this is where I could utilize it because here's the thing about trading. Trading is everything you do on the bigger time frame, do on the smaller time frame. That's the simplest way to put it. Whatever you do on the bigger time frame, do on the smaller time frame. So if, for example, my bias is a buy on the bigger time frame, and I'm waiting for price to trade into a gap or the block or so forth, on a bigger time frame, When it gets to the smaller time frame, then I do the same thing. I'm looking at the same area, right? So, for example, let's say me use this as a classic example at this point, right? Feel like we're gonna disappear. Oh my gosh. Where were we at with that? That was, oh my gosh. Where did it go? Let's do undo. Nope. I have no idea where that was. But anyway, so let me show you what I'm saying. All right. Any time frame. I should just use this. Let's use let's use this. Yeah, so those of you that were on the call this morning, that goal took a loss. All right, but actually, let me show you something here too. Let me show you. Let's go with what's going on. All right, show you what I mean. Any time frame. That's a good example. A good example. A good example. All right. So let me use this as an example. So firstly, here, right? See, we got price push down, big movements down, and balance created right here. All right. It's imbalance created here. Let's price trade back into that area and push down. Price trade back into that area and push down. Okay. So that's the first thing. So we on a 1 hour time frame. Okay. Now we're gonna take a look at like these areas here. So let's say price traded in to that 1 hour time frame here. All right. Remember, what if we do on this bigger time frame? We do on a smaller time frame. Price traded into that area. Let's see if we came down the 15-minute time frame. Okay. All right. Came down to a 15-minute time frame. Let's come down again. We go down to a 5-minute time frame. Let's see if we can find back that area. So we're just looking for the gap that was created, right? That's all. We're looking for the gap that was created. So for example, price came down now into that time frame. It pushed down. Okay, we push down. And smaller time frame perspective, if you look here, you'll see we got imbalance here created. All right. Price pull back up into that area and dropped again. Okay. All right. Price came back into the area, boom, and pushed down again. Okay. So that's like one example. I want to give you guys a better example. All right. We see how even though all the way over here, price is traded right back into it and pushed down. All right. On a if we had to do like a 1 minute, right? I just want to show you that you could use any time frame, really and truly, just to make sure it goes with structure. Okay. All right. I think we up to the time right now. All right. So like here, for example, we got like a 3 minute here imbalance. All right, just showing you guys. All right, see a price traded down into it. Boom. Then we pushed off. All right. On a 3 minute time frame, if we have like a 3 minute break of structure, all right. This was your previous high. Price came up, traded above that. All right, pull back, ready to pull back into the imbalance that was left here. All right. Market pull back into the imbalance. Boom. And then we pushed up again. Okay. So just showing you, like when we get a lot more time, I'll go deeper. I'll show you guys like into entries and all that good stuff. All right, but show you that you can utilize it on any time frame, but it has to coincide with structure. All right, everything gonna make sense. Okay. So once you get the breaks, wait for the pullback. When you get the pullback, boom. All right. So breaks the structure. Remember, like I said, you gotta confirm the entry. You don't want to just take it because of taking it safe. Okay. I want to make sure you got breaks of structure. Because then, for example, like this, all right, let's say like here, you got sell, all right, market push down. Okay. We left behind area of imbalance. All right. Do we want to sell that? Not really, right? Because price didn't break no structure, right? We didn't break no lows. So for example, yeah, price came in, reacted off the area, right? But ultimately, boom, 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 it pushed back up, right? Because price didn't take the low. If price had taken the low, then for sure we could look at that, right? Then we could look at, trying to get a setup like that. Just say, oh, here, price took the low, down, left the imbalance behind, right? This was your imbalance here, created, market traded back up, right? Boom, valid entry, right? Didn't take the low though at this point. So we know this is a weak low, weak high. So price gonna more likely come and take that out, right? But still, this would have been like a solid entry still, to target at least the lows, right? So with that being said, guys, I don't want to take you guys, much longer. I hope, man, that this was of value. Hope you go ahead and implement this information. Hope guys that you come out on these sessions every single Monday. Um, I do a session as well, on a Thursday, just personal, right, where you guys can plug in, just connect, for the link and so forth. And I'll put it out there, that you guys can join in on the session, right? But I hope, man, that you guys got value from this, right? Um, I hope you guys got value from the session, stay plugged in, come in every week, right? I send okay, Monique. So I gotta send out the recordings in the Discord as well. All right. Yeah, I just post recordings in like my WhatsApp stuff. All right. But I gotta post it in Discord. So if you go in Discord, I'll post it in the Midas Touch signals. Yeah. You'll see the recordings from the sessions posted there as well. Okay. So you're most welcome. Uh, was the Discord link? There's no link. You just once you go to Discord and you request to join it, like it should grant you access once you have like signed up for the Run the Play University. All right, you should get access. I think there's not a link. I can't send a link. All right. So yeah, guys. With that being said, hope everybody have a good one. Stay plugged in, stay connected. Happy trading. All right, let's get by this week. All right. Be blessed. I'll see you guys on another call.